Just doing a sound check. Don't expect we'll see a lot of people. Who knows? They're starting to build up. So welcome everyone, Sunday evening. Just give me a feedback on the sound and we'll get going here in just a couple minutes. So folks, we're going to do another week of these live streams. I just keep watching the feedback, see what kind of views we're getting. So make sure you hammer the like button. I know there's only about 30 of us hanging around. It's a fairly intimate group, but this is about the rebroadcast anyway once I finish this. So I'll get, like I said, give me one more minute, just finishing getting a couple things ready, and we'll be on our way. Yeah, there's a counter at the top that tells you 3 minutes and 30 seconds we'll get started. So, yeah, so we'll get going before that. Thanks a lot. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. It's very interesting because in 2 months it will be 42 years, so the clock keeps turning, right? So sorry for the late start. I do plan on doing these every night around 9 p.m. Eastern time. We had a major power outage for almost 4 hours today, so I couldn't even get my research done. So it was kind of one of those evenings. What a way to start out for a new week. So let's get into tonight's video. There's a number of things I want to talk about. I think the theme for this week is really, will the inflation trade come back on? We have CPI and PPI coming out. Everything that we look at from the standpoint of the markets right now are centered around this inflation. And we saw the 10-year trade down quite a bit. It bounced back on Friday. I'm going to cover a number of markets with these live streams. I can get through quite a few more of these scenarios as we just because it's faster, I don't have to do the editing. So, but as we look to this week, we've got CPI on Tuesday coming out. It's expected to show a plus 0.7, and last month in May we saw a 5% gain, and this is going to be a big number. And if we come in hotter than that, 0.8 or more, you're going to see a reaction in the 10-year. And I continue to think and believe that this inflation scenario that we're seeing here is not temporary. It's not transient. It's not anything that the Fed is telling you. And it's like just about everything you've seen so far, they're just posturing, trying to get us to be in a certain mode as far as the expectations go looking forward. It's very common practice with the Fed to do these things. But the CPI expected 0.7, PPI will be out on Wednesday. That's expected to show a 0.6. That came in hotter last time. And my expectation is that there's still a lot of disruptions going on as far as the supply chains and other things going on. Read an article the other day, I think it was yesterday, that was talking about some shortage in rubber. I haven't had a chance to research it yet, but we keep getting one thing after another. There's a shortage of something. At least we know how the world works right now. You've got to have some kind of scare tactic, some negative header to, get kind of reads and clicks, and that's what everything's about right now. Thursday, we've got initial claims coming out, expected to show 365. That came in a little higher, and I do expect to see that continue, and I've talked a lot about that with you folks, is that I believe that the employment situation is going to deteriorate over the next several months, probably not starting until August or maybe September, late August and September, but I think it's going to get very interesting. You see all these stories all over the place talking about how people are going to quit their jobs and lawsuits against states for cutting employment benefits, all kinds of things that are going on out there. So it's going to get interesting and challenging as we come into that final quarter, especially in September, October. That's when I'm expecting to see those things. But we are likely to see some of this stuff start to show up maybe in these weekly numbers on the claims. The continuing claims actually dropped last week down to 3.33 million, and my magic number's been 3.2. I've mentioned that a lot if you watch my videos over the weeks. And we get it below that, then maybe there's some material contraction going on there as far as the number of continuing claims, and that could end up to maybe mitigate some of the stuff I just talked about on the deterioration. But we'll have to see how that number comes out. Just going through all the reports right now. Capacity utilization on Thursday. Also, that I think could be interesting. It's not really that big of a report, but this is a number I'm watching. It's supposed to come in expected at 75.5, and I'm not sure how that's going to play out, but that is going to be interesting as well. On Friday, we have retail sales. That will be material, and that's expected to be down minus 0.4. So maybe there's some weakening coming in. There's some things happening that we're going to start to see as far as the markets go, and as far as the economy goes, we'll start to see some of this deterioration. I just don't see the acceleration that a lot of folks are talking about. And that the final thing that comes out, the U of M, University of Michigan Consumer Sentiment, that's expected to show 86 handle. I don't think that'll be material, but it's just kind of give you a little bit of perspective of what's going on in the economy. A couple big things, the big thing that's starting anyway is the earnings are starting this week, and they're going to run into the second week of August, and there's not a lot of them coming out for the entire week. There's 83 of them, but we're going to kick off with the banks, and the banks are expected to show blowout numbers. So that's going to be interesting as well, because if we get those kind of blowout numbers, then maybe we can really start to see some acceleration in the markets. And what I'm seeing in our database, I'll go through here in a few minutes, we did click over that 42% level by a pretty good mode on a short-term basis. So I'll review that as I always do here in just a minute. But as we just look clearly at the banks that are coming out, we got JP Morgan, Goldman, Morgan Stanley. We've got a bunch of the big banks coming out. So that's going, from my viewpoint, that's going to be the thing that's probably going to at least set the tone for the week, along with the CPI and the PPI numbers. I think those will be the material names that come out. So in tonight's video, there's a couple things I'm going to expand. Like I said, the beauty of doing these live streams like this, I don't have to edit them. And what I can do is potentially cover more markets and maybe even get into some more depth. So let's go ahead and let's take a look at the S&P futures here. And the S&P futures are down 5.75 right now. And it's interesting, we got our, you know what, before I do that, I want to go to the database. Sorry about that. Let's just flip over to the database for a minute before we go into that mode. We look at the weekly database, we downticked just a little bit. We had about 190 sell signals, 361 buy signals. We ended up at 70.85. I mentioned that I thought we would stay above this 68% level. We did that. There continues to be a lot of stability in this market, and a lot of this stuff shows up in the All Stats page. I'll go through that here in just a minute. Going to the daily database, this is where the big numbers started to flow out. We did see 2,585 new buy signals, 106 sells, so it was a 25-to-1 buy versus sell ratio, moved the database up to 48.25. And I talked to you folks a lot about this 42 number, and we were hovering right at 42, and then we usually blow right through this. The next numbers to watch is going to be around 62 to 68%, and around 72, 74 are some numbers that you'll hear me talk about if we start to get some decent traction here. And I believe this traction is going to be what we needed to move the S&P, and I'll cover here in a minute, up above 4,400. It looks like we're going to get some traction after a couple days of sideways, which I'll cover here in a minute. But just looking at the database here, there's definitely some serious traction coming on. I expect to see this maintain over the 42% level. We should have broken the barrier finally. We literally have been between 42% and the 44%. Let me zoom in on a section here. And this is what I was talking about. In this section here, what we see is some stats out of our database. And this is really important to understand because our database actually gives you a lot of insight into the trends that are going on. Now, the fact that we got 2,500 new buy signals on a breakout at an all-time new high, that doesn't mean every stock that's being bought or symbol is being bought at an all-time high. There's a lot of symbols that had rotated down and sold off. So there's a lot of bargains out there, even at these all-time highs. When you have the ability to look at 16,407 symbols, you can see a lot more in depth in these markets as they come out. So this is exactly what's happening. It's not, this does not equate, okay, why is this thing buying when the market's making an all-time new high? Well, these are all individual symbols, and those are things that were, that are important to to understand is that all the symbols and all, that's not what's being bought. What's being bought is symbols that set up bottoming patterns and other elements as we go forward. Okay, now let's dig into the technical side of the markets. And as I began to mention just a minute ago, is that we did get an RTX sell signal on the cash. We did not get it on the futures, but let's just review the S&P futures here. And as you can see, let me zoom in on the market grid real quick. And the market grid, what I'm expecting to see is probably looking for maybe a S1, S2 on the downside, just because of the negative rotation that's happening from the RTX sell signal on the cash. We should say it goes sideways. It's doing that right now. There shouldn't be a lot. S1, right now the high is 65, 43.74 is R1, S1, R1. I think it's going to lean a little bit toward this S2 level, which will get us close to the 10-period moving average. And I was talking about that last week. We spiked under it. We closed on it on the 8th. On the 9th, we were well back above it, trading at the high end of the range, which was Friday, and now we're seeing some backfilling right now. Let's go to SPX, because this is where a lot of things are going to come into play here. And here's the RTX sell signal, and RTX was 43.59. The close was 43.69 and change. So we should see a move towards an S1, S2 as far as the patterns go. So that would be 43.60, 43.50. We closed at 69. So these are moderate pullbacks if we do have one. On the upside, probably an R1, S2. So let's go to the weekly charts. Oh, before we move on here, PPM1 is turning up, PPM2 and 3, all three of the PPMs. And I am so sorry, I just realized that you couldn't see the stuff I was talking. Hello. A little fat finger in a live show. I realized you couldn't see the things I was just talking about. So right here is what I was talking about. This bar right here on Friday on the SPX was the RTX sell signal. We should come into these numbers here. I'll zoom in real quick on the market grid number here for the cash. And this is where I'm talking about. R1 78, S2 is 43.50. That's likely to be the lower end of the range. But what I see happening here is a couple days sideways, and that should be over by Wednesday, which brings us into this CPI and PPI numbers and those sort of things. So let's go to a weekly S&P chart. The SPX for a weekly basis, the S1 is 43.47. We went out. That will probably be the low, and we're looking at probably an R2 44.15 as a target for this week's high. We traded right into the extreme last week, 43.62. The high was 43.55 last week. But as we go to the weekly numbers this week, we're looking at 43.91, 44.15. The extreme this week, which would be a little far-fetched, I believe, is 44.39. But these numbers are going to move really quick. The higher the price goes, a 1% move all of a sudden is 50, 60 handles. So it's going to be very easy to get up to some of these numbers that I'm talking about here. So next market that I'll go to is the NASDAQ. Starting with the daily, we've been climbing up this 10-period moving average, and I mentioned this last week that we had a buy signal at 13,688 on 6/1, and we continue to run that signal up here. we're looking at right now, the 10-period moving average, 14,696 is that number. I don't think we're going to be able to get below that. We look at the market grid for today. I'll zoom in on that for you. Look at the market grid for today. The low's been 14,797, S1 14,760. I think we'll have a S1 from a viewpoint of the daily chart, S1, R1, if the extreme will be an R2, so we could see an S1, R2 in the pattern. But overall, we should continue just to climb along this line here and move the markets higher as we go through the week. I don't see, I've said this before, I don't see a lot of downside. Whenever I say that and the market goes down 0.5%, everybody says I call the top. There's no top in this market. We are seeing some dissipation of the PPMs right now. PPM 1 is at 0.20, so there is some weakness coming in. And when I show you in a minute, the Russell looks like it might try to claw back a little bit. We might see a little bit of leadership change just for the next several days. I'll go through that in a minute. But as we look at this thing, we're really climbing up this 10-period moving average. It's at a 0.20. It's just below trend level. PPM 2 is at a 0.26 and PPM 3 at 0.26. So this angle of attack is enough that we should see the market stay above that. Now this level of the S1, 14,760, which compares to the 10-period moving average, there's only a 30% probability to close below that level for the next couple of days. All right, let's go to the weekly graph for the NASDAQ. As we look at the NASDAQ for the week, we're looking at S1, R2. We're finally going to probably see this 15,000 handle this week. The PPMs are plus 0.79, 0.43, 0.59. And as you may be aware, anything over 0.25 is a trend. On a weekly chart like this is very positive, and the angle of attack and the slope of these trends are likely to continue for at least another 3 to 5 weeks, maybe even more. As we see the action this week, we're likely to be able to actually zero in on some of that activity. But we're seeing some acceleration in PPM2, a little bit of acceleration in PPM1. So these trends are well in place as far as that goes. So if you look at the, like I said, S1, R2 for a weekly basis on the NASDAQ. Next market that I'll cover, I'm just going to go through the weekly chart on the Russell. Russell was up 2.17, rebounded very sharply. We've been seeing a lot of weakness in the Russell, and this just kind of rebounded substantially. If I go back on this chart a little ways, if I go back to this weekly, the Russell actually got a buy on 7/10/20. We're still in that same buy. This is one of these really long-term buys. I believe this consolidation will start to see a move higher, and this is what I was talking about on as far as the Russell looking like it's going to try to make a little bit of a comeback. We're going to have to stay above 2276, 2265 are the key numbers here. And if we can stay above those levels as we come into the end of the week, we're going to start to see this thing move toward the upper end of the market grid. Now, this is the cash Russell. So we look at, let me zoom in on the grid for this week. We're looking at a minimum of 2301, 2325 is probably going to be the target here. S1 2258 will be the range. So looking on a weekly basis, this is for the week, and S1 R2. Let's take a quick look at the spread chart, because I think this is where we're going to start to see some some movement. You see we upticked a little bit on this spread. I think the spread will come in. I don't think it's going to be able to take out these ranges up here where I have a cursor at right now. I do think we'll come back into this consolidation range. This level right here is going to be fairly big resistance here, but the Russell should start to at least stabilize because we've seen a lot of relative weakness over the past week. So I think we're going to see a stabilization there, and it will play a little closer to whatever the Nasdaq's doing, maybe outperforming some days, but basically keeping up. So I don't see that weakness that we saw with the reversal on the chart we were just looking at a few minutes ago. Next market that I will cover is the 10-year treasuries. I did not, hang on. This is the 10-year, and I want to go to the daily because I think that's fairly interesting as we look at this. We finished at 1.35. We did print down to 1.26 the other day, and this is right down to the 200-day moving average. I've covered this over the last couple weeks that I thought that would be the extreme. I actually thought around 132 would be where it would stop. All of these markets tend to get a little more emotional and extend some of these targets a little bit. But one of the things that's already starting to happen is the PPMs are all starting to turn up here. Now, PPM 1 is still down at a minus 0.92 on a daily basis, which says there's only a 10% probability for the market to move back above 1.41. So my expectation is that we will stay in a range here above the 200. We also got an RTX sell signal, which suggests that the possibilities for a range for tomorrow is back to around 1.33, 1.32. That should be the bottom end of the range, a couple of days sideways. And what will happen on a couple of days sideways is that the momentum, that downward momentum in yields will start to dissipate. We're already seeing PPM 2 penetrate its second derivative. So this is all it really needs. We go to the weekly, and you'll see the weekly came right down to the 40-week moving average. Let me put that up there. That was 1.269. The low was 1.268. We bounced right off of that number. We had an upward slope of angle of attack of 1.32 on that PPM 3. So that only gave it about a 10% probability to close underneath that level. So that's why we got that bounce last week. And now we're probably going to do be sandwiched between 1.26 and 1.52. That's going to be your primary ranges that you're going to have. And this is something that I've talked a lot about, is especially when using the PPMs, understanding moving averages, is that what you are going to get is you'll get range bound in between these moving averages when you have PPM 1 down 1.77. So it's in a downtrend, telling you there's a lot of downward pressure at 1.52. But then at the 40-period moving average, you have 1.32 up, which tells you that you get sandwiched in those ranges. So the 10-year is likely to get sandwiched in this range here. So I'm going to continue with some of the related markets. The next market I'll cover is the Dow, and the Dow continues to be sideways. This is the weekly graph that we're here. We got an RTX sell signal 4 weeks ago, and we've been absolutely sideways. It looks to me we're starting to see some acceleration to the upside. We also had a cycle come in the middle of these dots that are on the page here. I'll mark them with the cursor right here. These dots were a cycle event. If we can get above the highs of this pattern, which is at the 92.85 level, then we're likely to see a move toward the 200-week moving average, which is 94.82. I talked about this the other day, that this is going to be your target zone at least to the 94 handle, and the monthly charts actually suggest we could see even a higher number above that, closer to 98. So typically, and I'm going to cover gold next, but typically this is not the type of configuration you expect to see a bullish gold or anything like that. But this Dower situation is going to get interesting, especially if we do see an increase in yields back up anywhere into the 140 handle, possibility of getting up to the resistance I just talked about. Then you can see the Dower continue to be fairly strong in this pattern. So the final market that I'm going to cover tonight is gold. I want to go to the daily chart first. And as I've been talking about this for the last several days, I believe this pattern is setting up a low. And we still have a bit of a negative pattern on the PPM2. It's at a 0.20, but this pattern is very bullish here. Very bullish, meaning that we're going to go back toward the 17... Sorry, let me get this number right. Going toward the 1840 level, we've got some resistance up here at this is the daily 200-day moving average at 1836 to 1843. We should start to move up toward that level. I'll show you on the weekly chart here in a minute. But if we look at the PPMs, you're seeing PPM 1 and 2 are crossing over through their first and second derivative. PPM 1 is just about at trend level, so we're definitely seeing that. And even the WaveTech 200 average is actually turned up as well. We still need the 40 PPM 3 to turn up and go through at least its second derivative to to set up a much better bottoming pattern. But as we look at the weekly chart, now it gets very interesting, because I'm going to draw something on the page here quickly, just so you can see exactly what I'm talking about here. Is we're really starting to set up somewhat of a right shoulder here, and the potential is for this thing to start to move back up. Now, we still have, I mentioned this the other night, that we do have the 40-week, we do have a weekly buy signal that is still long in this pattern, but this is why it's long. It's set this up. Now, there's really no concerns here, because what we're, from a weekly trend standpoint, even though we're crossing over the PPM second derivative on PPM 1, that's a bit negative, but we're in a excuse me. It's a bit negative, but it is actually setting up this pattern. The key PPM to watch is this PPM 2 down here. It's through its first and second derivative. It won't take much to turn this PPM 3 up, and then you'll have a setup for this pattern. But there's a lot of things that have to happen to actually get this into a weekly trend mode. From this level here, there's going to be a ton of resistance at the levels I just mentioned, all the way up to the 1900 handle. There's going to be resistance in here. So it's going to take a little bit for this market to get going. And what's interesting about this, is I just talked about a bullish Dower scenario, and I'm also talking about a bullish gold scenario. So typically they don't go hand in hand. Whether the Dower fails or the gold fails, I don't know. But it's not unusual to see them both go up at the same time for short periods of time. Ultimately, they typically will break loose. But that is really the pattern is set up. This is what they're telling us, and there's nothing wrong with them going out. We've got gold down about 790 right now, so we are seeing a little retracement, and we're likely, as we go through the scenario for this week, the 1791 level is S2, S3 is 1782. That's probably going to be your lower end of the range. R1 is at 1819, so that will likely be the pattern that sets up. Yeah, and I yeah, so this way actually I'm going to complete the video tonight. I see some great questions on here, but to make these things so they're watchable after the fact, I'm going to have to keep them a little bit brief. And so what I'll do is on Wednesday night, we usually do our Wednesday afternoon live streams. I can't do those the next several weeks, but I will do more of a live stream. So mark your calendars if you can be around 9 o'clock Eastern time. We'll do questions and I'll cover some stocks on Wednesday as well. So anyway, folks, thanks for watching. I really appreciate it and look forward to talking to you tomorrow night. And that'll be at 9 o'clock Eastern time. That's the rough start time. And if you're on Twitter, make sure you've subscribed to Twitter. And if you haven't subscribed to the channel, subscribe, hit the bell so you know when I start these streams, because I'm doing live streams every day now. Anyway, folks, thanks again for watching. Appreciate it.